Hi, I'm Jonathan Banks, Executive Automotive Analyst with NADA Used Car Guide. Today I will discuss July's used price performance and NADA's outlook for the upcoming months. The negative impact from the debt ceiling debate on automotive sales may be significant, even though the government decided to raise the debt ceiling. The political posturing surrounding this event overshadowed the deficit reduction plan that eventually was signed by the president. A negative short-term impact on consumer confidence will surely occur. In fact, the Michigan Consumer Sentiment Index fell to 63.7 during July, down from 71.5 in June. This represents a two-year low for this metric. In addition, consumer spending and savings rates for June verified that consumers are cautious and starting to save more than they spend. This comes on the heels of very disappointing employment numbers. Job creation only reached 18,000 jobs in June, well below the 140,000 needed to lower the unemployment rate, which now sits at 9.2%. Forecast for July job creation is approximately 85,000 jobs, better than last month, but still not enough to lower unemployment. These negative economic indicators alone surely would have had a negative impact on consumer confidence, which has dropped 13 points since our high point in February. Adding the uncertainty regarding our nation's debt and solvency surely did not give consumers any reason to feel confident about the future. In spite of unemployment, demand has so far proven to absorb the new vehicle production without manufacturers resorting to artificially high incentive strategies. According to auto data, incentives through June were tracking 24% below last year's levels on cars and 14% lower on trucks. The slower sales rate and the return to normal production prompted Japanese manufacturers to raise incentives. According to Edmunds, incentives on the big three Japanese manufacturers have increased by 20% in July compared to June. We expect other manufacturers will follow suit to compete with these increases, but to also entice consumers back into the dealerships. The used market remains very strong, with demand increasing and prices remaining very stable. Used sales in July, according to C&W, are up 13.5%. Meanwhile, prices, according to AuctionNet data, are continuing to show strength for most segments, with only the small and mid-sized car segment showing depreciation from the high points experienced in early June. NADA's short-term forecast for August expects more declines in the small and mid-sized car segments and stable prices in other segments. As we move forward into September, we expect some downward pressure on values from incentive increases on the new vehicle side. But the big impact from incentives on used prices will likely not hit the used market until the fourth quarter. The end of the year will be interesting as used supply, especially on 3-year-old models, will dry up due to the pullback in leasing during 2008. Many domestic models will have a shortage of lease returns, which will likely offset any incentive increases that manufacturers use to stimulate sales. Overall, the used car market should continue to be a strong area of our industry, even though many headwinds will continue to put a damper on our country's overall economic performance. Please check out our August guidelines for more information or send me an email at jbanks@nada.org. Thanks.